Just pleased to be here today to talk to you about base metals. So just to explain, so I'm Dan Smith, head of the research at AMT, which is a ring dealing member of the London Metal Exchange. We're also part of the AMC Group, which is a producer and trader of metals and scrap. And we have 700 people across Africa, Asia, North America and Europe. So that's it in terms of the corporate intro. So I'm going to talk for about 20 minutes today about the kind of the base metals, China, and the kind of energy transition as well. So I wanted to start off here with the kind of big picture, big macro picture, essentially. So you've got here, this is just the kind of intro to what's going on in terms of the metals world. So you've got here, first of all, does this work? Not really. You see that? No? Okay. Well, on the left here, we have global manufacturing PMIs. If you focus to start with on the story for US and Eurozone, the main point really is we had this kind of big boom, of course, after the COVID crisis, and then kind of pullback, particularly in terms of Europe. But now generally the story for these OECD countries is we're kind of trending up. So US in particular, just about back above 50, and Eurozone's kind of pulling out of the worst of its slump. So the macro story at the moment is quite supportive, I think. The other key dynamic, of course, is about inflation. We actually had US inflation out about half an hour ago. This is, of course, the number one obsession for financial markets is what's going to happen with inflation. So you can see here on the right-hand side, this is core CPI coming down pretty sharpish. And of course, what this means is that central banks are able to start cutting interest rates. So this is probably the number one factor to follow in terms of what's driving sentiment within the commodity space and metals. So overall, I think, when you talk about why, someone might say, well, why have commodity prices gone up, metal prices? I think this is the number one dynamic, which is inflation is coming down, the cycle is turning up, and rates are probably going to come down this year in the US to a greater or lesser extent. So I'm going to talk a fair bit about China, which of course many of you will know is the kind of big elephant in the room really for a lot of these markets. So typically it accounts for more than 50% of demand. But the key point at the moment is that the Chinese economy is pretty mixed overall. So we saw initially in the first slide that actually manufacturing activity is pretty weak and inflation is depressed. But what I'm showing here really is on the left-hand side here, these are the sectors that are actually doing really well. So solar PV, electric vehicles, microchips, they're all kind of in this upward cycle at the moment. So those growth rates are actually about 20 to 40% into the early part of this year. So, and these are all really important sectors, of course, for things like copper, for nickel, and for a lot of the base metals. So, this is important to understand that these sectors are doing really well. And this is actually helping to boost demand in China, which is a key consumer. On the other hand, we can see here on the right that the housing market very much remains in crisis. So if you cast your mind back to about 6 months ago, many people were, markets were generally quite depressed, even things like copper. And this was because of a fixation with the Chinese property market and an anticipation that there will be a property market crisis. And as you can see here, actually, the prices in China for houses in these tier 1, 2, and 3 cities, they're actually still coming down. So we still have a problem in China in terms of property and construction, but this is being overwhelmed by all these other positive drivers, which I've mentioned here on the left. So definitely it hasn't gone away, but for the time being, investors and markets are much more focused on this positive story on the left rather than this more negative story on the right. So this is an index actually of prices for the past year for these key base metals. So we're looking here at the 6 base metals traded on the London Metal Exchange. And the first obvious story you can see here on the left is, look at copper and zinc. We basically shot up pretty sharpish in the past few months. Even aluminium's gone up, even though the market is relatively comfortably supplied, I think. And this is reflecting actually this global cycle turning up, but also a lot of investors coming into commodities at this point, which is, in a way, it's kind of distorting prices, I think. And then on the right-hand side here, we spend a lot of time looking at tin actually as well. So this is another metal that's quite vital for the green energy transition. And actually, it's been the best performer within the base metals complex so far this year. So what's that? Price is up about 30 to 40% so far this year. And then I'm going to be talking a fair bit about nickel as well today. You can see here with the yellow line on the right, nickel price is pretty depressed. They picked up a bit in terms of the past month or two, but we're still down by about 20% from where we were about a year ago. So overall, it's a kind of mixed story, but generally you can see here that everything is moving higher in terms of the past month or so. And this is something I like to kind of focus on. So this is actually on warrant stock for these base metals. So in a way, it doesn't tell you everything, but this is one of the key things to follow when you're thinking about whether these markets are improving or getting worse. So on the left here, we've got on warrant stock for copper and tin. You can see here pretty clearly that the trend is significantly downwards, down by probably 50% or something from the highs. And this reflects the fact that those markets are pretty tight overall. On the other hand, here we've got nickel with the purple line. Inventory generally steadily trending up, and this is for a combination of reasons which I'll go into in a bit more detail shortly. But the two kind of key dynamics really are, one, that the market's oversupplied, frankly, and secondly, the LME is adding extra brands to its system at the moment, which is enabling a surplus that was outside the LME to flow into LME stock. So this is class 1 nickel basically appearing on the London Metal Exchange. So overall, copper and tin quite tight, nickel looking pretty oversupplied. And this is kind of staying with this high level theme. So this is basically consumption of metals in terms of growth rates on the left here, and then production of the same metals on the right. And in terms of the demand story, again, I kind of hinted that we're in this kind of upswing in terms of the global economic cycle. And you can see here actually how all these markets kind of tend to move together. So there are different fundamentals, of course, between, say, copper and aluminium, but they all kind of follow broadly a kind of common theme. So we had this kind of downswing basically into 2023. And then more recently, you can see like nearly everything is trending higher, either from negative to positive, or moving in a kind of northward direction in terms of the most recent trend. And another few key things to point out is, I mentioned about nickel being oversupplied, but you can see here with the blue line on the left that actually demand growth is pretty good actually for nickel. And the other point worth pointing out here is that when you compare something like copper to aluminium on the left, you can see actually the black line for copper has been stronger than aluminium, which is actually very unusual. So typically copper grows by about 1 to 2%. Aluminium consistently grows faster because it's cheaper, and it's actually made a very good job of penetrating into these sectors like packaging, automotive and construction. So this is quite an unusual thing, and this is actually reflecting this green energy transition, which I'll talk about in a bit more detail shortly. And then on the right-hand side here, we see the supply dynamic. We can see here, say for nickel, again, that production growth is pretty rapid here, just under 10%. But in terms of copper, we can see here with this dark kind of blackish line that growth rates on the supply side of the copper are pretty anemic. So they fell to about 0 recently and have picked up a little bit. And so the dynamic for copper is very different, which is supply growth is definitely extremely poor. So that's the kind of high level view. Now I wanted to go into some more detail about each of these markets in turn. So the headline I've kind of flagged up for copper is this idea of what I'd call decent demand growth globally, but also kind of weak supply growth. So on the left-hand side here, I've got China, and then the dark blue line is apparent consumption. So you can see here actually that the demand has been steadily improving, and we're growing by about 2 or 3% in terms of China at the moment. And I think the main thing with China is actually it's provided this kind of quite bullish surprise. So I mentioned earlier that a lot of people were quite gloomy on China about 6 months ago, But I was actually arguing, we're looking at the wrong things here. We've got to focus on this green energy transition. That's far more important than worrying too much about the property market, which is definitely weak. So, definitely China provided a positive surprise, which I think is now a bit more accurately reflected in today's prices. And there are two key reasons behind that, really. One is, I think strategically, we've got to recognize that a lot of these sectors are incredibly important for China. So solar, electric vehicles, microchips, all these things are being focused on by China, and resources are being directed into those areas to make sure that those parts of the economy are growing well. I mean, it's fair enough to say that there is a focus on construction as well, but actually, so far it's been an attempt to kind of underpin construction rather than really chuck too much money in that direction at this point, I think. And then the second surprise from China, I think, is actually how much China has started to dominate overseas markets through heavy amounts of exports. So, I showed some charts earlier showing EV sales. What happened last year was actually China overtook Japan for the first time to become the world's largest exporter of cars. So it actually increased its exports by about 60%, 60. So that's the kind of second element, which is, China's focused on this stuff strategically, and it's becoming a very dominant player in terms of export sales. And then if we look at something like solar PV, amazingly, China actually accounts for 80% of global capacity for solar PV. So it's incredibly reliant now on this overseas market. But, so far that's been good because you've had very rapid growth in sales and rapid growth in exports from China. And, ignoring the current trade war with the US, overall that's been pretty good for base metals demand. And then the third kind of element for copper is actually this idea that we've built out all this wind and solar power generation within places like China and other places. And now the next phase, particularly for this year, but for the short term, is actually to connect up a lot of that disparate power grid. So China's spending a lot of money right now to build extra power infrastructure and to connect up those things that are built over the past year or two. So all of these things are super positive. And then the other thing I'll kind of touch on is this idea that, there's a lot of talk about China producing a lot of copper supply, but actually if you look at the import picture, they're continuing to suck in increasing amounts of copper. So the copper imports went up by about 7% in the first 4 months of this year. So I don't care what you tell me about supply, it seems fairly obvious to me that they're not producing enough to meet local demand. I mean, there may be an element of strategic stockpiling, but the key thing is China's still buying copper at very high prices. So that tells you something interesting, I think. And so that's demand, that's China. Overall, pretty good. And then on the mining side as well, we're super tight in terms of copper concentrate at the moment. So spot treatment charges actually fell below zero in the past few weeks. And that's showing there's this kind of desperate competition between smelters and miners. So smelters are prepared to accept basically zero commission or negative commission in order to get their copper concentrate. And this is another key element now, which is these places like Chile, they have significant structural problems in Chile. As I flag up at the bottom here, production was actually down by a couple of percent last year. Also, Indonesia was down last year as well for kind of various reasons. And these kind of very dominant producers, they basically offset the other growth that we saw in other parts of the world. So places like the DRC and Peru, they both increased production, but it wasn't enough to compensate. Well, it kind of broadly offset the cutbacks we saw in other countries. So the global picture was for actually 1% growth in copper last year. And given that demand is growing faster than that, you can see why this is kind of squeeze on prices and treatment charges. So that's the story for copper. Quite bullish, but I think probably prices already reflect quite a lot of this good news. And then in terms of nickel, so we saw in some of the earlier charts, it's kind of a very different story. So we have this kind of super strong demand, but also even stronger supply, I think. That's certainly the kind of common narrative at this point. So what I've flagged up on the left here is some of these key sectors for China again. We can see here with EVs, growth rates are still about 40%, something like that. But also things like stainless steel, where the nickel containing part of stainless steel, that's also growing by about 20%. So actually the most recent data showed that China reached a record high in terms of stainless steel output. So again, it's another area where China's become super big and it's still growing quickly. So the other key element is actually for nickel is this kind of dynamic around batteries, which I'm sure a lot of you have been talking around today. So what we know in the early phase of the EV kind of revolution was that a lot of these cars were things like Teslas, kind of very expensive cars with high performance. And most of these cars actually had the NMC technology, i.e. nickel batteries. But the problem with that is nickel, of course, is pretty expensive. So it's fine if you want to spend $50,000 on a Tesla or something. Not sure what you spent on your Tesla, Barry, but they're expensive cars. That's the point. So you get high performance, but you've got to pay for it. So the next phase of the development is this kind of LFP, lithium iron phosphate, which doesn't have any nickel. So they're going to be cheap, probably not going to have the same performance and the same range as a nickel battery, but that's the kind of second phase of the revolution really that's happening at this point. So in a way, nickel is kind of really in the heart of this transition, because in some cases we may not need it in batteries at all. In other cases, if we want to stick with high performance, we're going to use it in vast quantities, frankly, in each battery. And some of this, of course, is also to do with economics. So, if nickel price is super low, then all of a sudden your battery gets a lot cheaper. And vice versa, of course. So at this point, we've got decent growth in EVs. We've still got a lot of nickel being used in batteries, and the stainless steel sector is growing pretty well. So this is why we have this kind of quite strong demand story for nickel. And then on the other hand, we have this kind of supply boom. So many of you that know anything about nickel will know about the very rapid growth taking place in Indonesia. May not be particularly green, but there's an awful lot of reserves out there and resources that can be tapped into to boost production. So Indonesia already accounts for just over 40% of global production for nickel. Most people think it's going to go up to about 70% odd in the next 5 years or so. So there's going to be this massive dominance of Indonesia within the nickel space. And then the other key dynamic is around China. So China is also growing pretty quickly, and you've got these kind of two key countries which they don't seem to care that much about cost. You could say the environmental credentials are kind of questionable, but nevertheless, this is happening right now, and there's this massive surge in terms of supply, which is driving out a lot of the high-cost producers in other parts of the world. So certainly, according to our estimates, nickel is still in oversupply of about 40,000 in the first half of this year. And LME stocks are rising, and they're up by about 30% for the reasons that I've mentioned, which is the oversupply and the extra brands that are being listed on the London Metal Exchange. So overall, we're kind of moderately bearish on nickel, actually. Doesn't seem to be too much justification for the recent jump in prices. And generally, the market consensus is we're going to see lower prices over the next year or two, and it could get quite nasty actually if a lot of this supply really comes through and hits the market soon. Right, that's it in terms of nickel. Just checking the time. Just very briefly in terms of tin, quite a small market of course, but something that's quite important for us. So I'll kind of skim through it fairly quickly. The main point here is that again, tin's driven by these kind of familiar countries. So China and Indonesia, again, very dominant. And what I've got on the right-hand side here is actually Indonesian exports of tin. So basically the exports from Indonesia actually dropped down to pretty much zero in the first couple of months of this year. And this was because there's a new government being elected in Indonesia. And as that transition was taking place, basically they didn't allow any mining and exporting of tin out of the country. And this is a pretty vital country, so this is one of the reasons why tin prices really shot up. there's this squeeze in Indonesia again. And in terms of the second key driver, many of you may be looking at the semiconductor cycle, seeing all these tech stocks rising. This is a pretty vital sector for tin demand as well. So as soon as you see that, those microchips rising and a lot of the technology stocks doing well, this tends to boost tin demand as well. So you've got this fairly good demand, I think, and the squeeze on supply that we've seen in the first part of this year. So the outlook, we think, for tin is it will remain quite tight, but there has been this build up in inventory in China, which is a bit of a thorn in the side for the bulls at this point. So in terms of our forecast, this is something we actually put out in April. So basically the story on the right here is we were bearish on pretty much everything, notwithstanding some of the comments I said earlier. Not super bearish, but we were thinking most markets will be lower by year end. So I still think this is a sensible forecast. So what we have right now is, markets like nickel and zinc, generally they're pretty oversupplied actually. And some of the rallies we've seen don't seem to make sense. Other markets, I think, like copper, are more difficult to explain in a way, in the sense that fundamentals are clearly pretty tight. Well, prices are going up. The LME market looks tight, but actually the fundamentals themselves are not, are sort of slightly soft in terms of China in reality. So we have these things like the shape of the forward curve, for example, is telling you that consumers are not particularly desperate for copper at this point. As we saw, things like demand is not particularly good, and this is a reflection of the fact that on high prices, people have started to cut back a bit in terms of demand. So it's worthwhile bearing in mind that you can switch between copper and aluminium, for example. I wouldn't say fairly easily, but in things like air conditioning, wire and cable, etc. So when prices go up too much, you do tend to kind of destroy demand if you're not too careful. And then the other thing, just, I know we're at a conference where we're talking about mining, but for the year ahead, we also look at seasonality charts. So essentially, copper prices tend to go up pretty well in the first quarter of this year. They tend to peak around week 9 of the year. And then the usual pattern is for them to head lower over the summer and remain lower by the year end compared to where we are today. So seasonality, again, is rather negative for base metals and copper. So that's where we are. We think we're looking for lower prices by year end. And so this is just a quick summary. So I've spoken a lot today about copper, nickel and tin. In terms of the big story, I think we are in this kind of global economic upswing, it's fair enough to say. And we are seeing inflation coming down. So all of this is pretty good news, and it tends to mean that people come into commodities as a potential kind of store of value effectively when inflation's persistent. And as I mentioned, the global technology cycle is also turning up. In terms of nickel, we've seen that prices are down this year. Copper and tin have rallied. So I think to some extent, prices kind of reflect fundamentals in that sense. In terms of demand, we saw that these markets tend to move up and down together, but something like nickel has got pretty robust demand. Something like copper has got relatively weak demand, despite the fact everyone's super bullish on copper. In terms of supply, we have a lot of challenges around copper as well. So these places like Panama, Latin America, they've all been squeezed recently in terms of supply. So the supply side is also pretty anemic in terms of growth. And then in terms of the battery sector, in things like copper, we are seeing lots of attempts to bring down the amount of copper used per battery. We spoke about this transition in terms of nickel. So there's this kind of crucial battle taking place at the moment between NMC and LFP. That will be really vital to see where nickel goes next. And finally, for something like lead, it looks like lead will be pretty persistent in batteries for now. Otherwise, that market is going to suffer quite badly as well. So that's it for me. This is our website. It's got some of our research on if you want to take a look. And thank you all very much for your attention. Yep, any questions?
Hi Dan, just a quick one there. You mentioned production in Indonesia. Regarding nickel, we've seen the BHP nickels of the world being probably dying on the sword of the Medeca copper golds and other Sulawesi-based producers. Do you think there'll be a premium placed on, improved ESG credentialed metals, like greener metals? Will the market be prepared to pay a premium for those?
Yeah, it's a very good question. I mean, I think it's, to be totally honest, my gut instinct is it's going to be quite difficult to get people to pay a premium. I mean, we've seen this in many industries called like green steel and all these things. And I think the danger is that, of course, a lot of these things are based on commodities. People are used to they want the best value. So I'm sure there'll be scope for kind of green copper, green aluminium, etc. But it's always going to be quite a hard sell because you're competing against a lower price, and you've got to convince people that all the kind of metrics add up and all these things. So it's difficult to get those things rolling, I think. And measuring ESG is difficult. Getting people to pay more is difficult. Obviously, things like copper are already at quite high prices, so people are going to be reluctant to pay another premium on top of that as well. So I think it's a big ask, but hopefully we'll make some progress in the next few years. And obviously you've got a place like China and Indonesia where, you could say, environmental issues are important, but they're not the number one issue in a way, because, you look at Indonesia, it's not necessarily as friendly to the environment as Canada or somewhere, but nevertheless, they're going to be the dominant producer of the future. So, I think it's, I think it's a big ask to get people to pay more, frankly. That's my take.
Hi. Just going back to tin, you said that you thought that bulls would be disappointed and that you wouldn't see higher prices. I just wondered if you put a figure on that. What do you think are higher prices? Because 33,000 is pretty good where it is now.
Yeah, so tin is an interesting market. I mean, one, obviously, it's pretty small. I think what will probably happen with tin is that the people forget. I mean, the ITA, I don't know how much you know about the industry, they're often kind of promoting this idea we need lots more new investment in tin, which is true to an extent. But what happens is when the price goes up, you tend to get a lot of these artisanal miners starting to increase output. So it's a very volatile market. Two, it's pretty price sensitive, I think. So if you get high prices for a year or two, then you're just going to encourage all these artisanal miners just to get out there and with their pickaxes and just start releasing tin into the world market. So I think there is scope for more serious projects, but that's the biggest challenge, I think. And it's as you say, prices are already pretty high today. So it wasn't too long ago we were at pretty depressed levels. All of a sudden we're back up to 30, 33, 34, 35. These kind of numbers are pretty decent. So most people can make money at those levels. I would say when you start to go below 30 or 25, then you're starting to choke off high cost supply. But as long as you're up in the 30s, it's pretty happy days for most of the industry, I think. So there's one question here.
Yeah, hi. Sorry if you mentioned this at the start, I was a couple of minutes late. But I'm wondering, where does Russia fall into everything with all of their traditional metal exports?
Yeah, you mean just generally in terms of base metals?
Yeah, generally, or I suppose nickel, I guess.
Yeah, no, so that's a very good question. So generally when the sanctions were tightened on Russia, most prices went up. Because we know that, say, in nickel, that Nornickel is a very important producer of class 1. So definitely it makes it, reduces supply immediately. But what we've seen in many cases is actually there's a sort of diversion of supply. So what happens is kind of cargoes get redirected. You've still got pretty happy buyers in places like China and India of many commodities. So some things I think are difficult to redirect, like gas, for example. You've already built the pipelines, but many commodities you can redirect them to other parts of the world. So there's always kind of effectively ways to get around sanctions. And to be honest with you, this is what a lot of traders do, really, is to kind of they're not breaking the rules, but they're just kind of finding ways around whatever rules are in place. So there may be a slightly higher price for that because, of course, if you're having to send stuff further away, you're probably going to need a slightly higher price. So I think Russia's been getting lower prices and consumers having to pay a bit more sometimes. But, it doesn't, I don't think it's a massive game changer in that sense.
Okay, thank you.
Hi, you didn't really mention much about sort of defense industrial complex effect on base metals going forward, because, I mean, Western governments are playing catch up on Russia's defense industrial complex, and then also, of course, there's a huge reindustrialization, infrastructure renewal going on as well, mostly for base metals, I'd say.
Yeah, that's actually a very good question. I mean, I was kind of joking with someone earlier how nobody really knows that much about the military spending that's going into all this stuff. We know that things like copper, zinc, nickel, all these things are pretty important. I suppose what I would say is that, you look at a country like China, one of my answers is, we know that China's importing a lot of copper, right? That's just a fact because we can verify that with other numbers. And I suspect that some of it is, extra military spending in certain countries, not necessarily China, but we can see this kind of globally, who's importing, who's consuming more than we'd expect, I suppose. But the honest answer is, it's one of those areas, of course, which is incredibly difficult to measure. No country is going to tell you what they're spending on the military. But I suppose what we try to do is to, we have a fairly good handle on supply, and therefore we can kind of see where the kind of pressure points are, if you like, which is, we certainly need a lot of this stuff for the green energy transition. But I mean, I suspect there's a temporary boost in many countries because of military spending. It's just very difficult to quantify, frankly. Okay.